All right. So we are going to continue our series on order block, right? We are going to continue our series on order block and then and fair value gap again. Um so let's continue here. Now, um the big question is, which should we trade? Order block or fair value gap? Which should we trade? Now, me personally, I trade order block. Now, there are few reasons why a lot of people, right? Yeah, if 10 professional traders are to choose which they trade or which they will prefer, order block or fair value gap, they would really prefer to trade order block. And the reason for that is uh fair value gap has some disadvantage, right? Let me see if I can find a fair value gap here. All right, let me use this one as an example. Guys, can you hear me and can you see my screen? Because this part is important. Can you see my screen and can you hear me? Can we hear me and can you see my screen? All right. All right. So let me use this one as an example. We already know, we have already been able to establish what fair value gap and what order block is, and we already know how to recognize them, right? So we are looking at this move. Where is the fair value gap in this move? This, right? This one, two, three. Now, I said yesterday that whenever you see a turn like this, you're looking at the candle that moves very fast like this. Look at this candle. It's the long one. Even if we check here, there is no gap here in this one. So there's no gap here. So the gap is between here and here. All right. That is where the gap is. And then once there is a fair value gap, I said there is automatically or obviously an order block right there. Then here is our order block right here. Now let's see what happens here. Right. Let's say I want to trade. Let's say I want to trade fair value gap, right? Let's say I wanted to trade fair value gap here. Let me show you. Now, again, I did not say, I did not say fair value gap is not a good way to trade, right? Of course, you can trade fair value gap too. You can use fair value gap as your entry. But then, let's see, I would place my entry at the beginning of the fair value gap, and then my stop loss would be at the low of this candle here. That's the normal way. We're still going to be talking about entry and how to place your stop loss and take profit and all. And then my target is going to be, you know, at the beginning of where this started reversing. That's how your target should be. Now, this is a fair one, right? As you can see. But look at what happens, right? The markets started going up. We have recognized what our fair value gap. We have actually placed our limits, or this is where we intend to sell. We're still going to be talking about that when we start trading on the MetaTrader 5. We are going to be setting limits and all those things. We are going to be doing that. As you can see, markets came back into here, tap into this. The market would have tapped into what? How so entered it would have entered the trade here, and then the market would have started going up like this, and then it came back down into our fair value gap, broke through our fair value gap, and entered into the other block like this before it start going up to get to our take profit, as you can see. All right. So that is why most people see again, one disadvantage of trading other block is you are going to miss out on a lot of trades sometimes. You are going to miss out on some trades because there are some markets that will just respect what that will just respect uh fair value gap. There's some market that will just respect fair value gap and not other block. Let's see examples of that. Let's see some examples of that. Let's see if I can find an example here. Okay, look at this one now here. Look at this move here. Let's see. I don't know for sure yet, but then let's see if there's actually a fair value gap here. Yeah, there's a small gap here. As you can see, there's a small gap here. So there's a gap here, as you can see. Even this one too this one too. It actually tapped into what? Our other block, as you can see. It actually tapped into what? Our other block. This is our other block here. As you can see, the market moves up like this, came down, tapped into our other block, and then start going up. All right. So if I'm to set my, this is how I'm going to enter this trade using other block. Tap into my other block. This would be my take profit here, right? At the beginning here will be my take profit. And then my stop loss would be at the bottom of the order block. This is how to place your trade, like this. So the market gives us a turn like this. We set our limits like this. We are still going to be talking about that. Again, this whole section is a series. There's still a lot of things that we're going to be looking at. We're still going to be looking at liquidity after this order block and fair value gap. We're still going to be looking at entry, top down analysis. No, after liquidity, we're going to be looking at top down analysis, and then we're going to be looking at entries, and then we're going to be going down to the MetaTrader 5 and trading, and how to set your stop loss, take profit, where you're to set your stop loss and take profit and all that. But this is how you typically set your stop loss and take profit. The risk to reward is perfect here, like this. Here, even this is where we are going to enter our trade here. As you can see, the risk to reward is going to be as the entry of what? Our order block. As you can see, once it taps into our order block, it starts going up. This is going to be our... So the market will go up like this, get here, come back down, and then later get into what? Tap into what? Our take profit here. As you can see, this is a perfect way to enter this market using order block. Using order block. I'm showing you guys examples here. So let's see another example here. All right, now look at this one here. Look at this move here. Now, that is why, guys, that is why one thing you should always do first is, even if you do not understand, of course, we are still going to be getting to, we are still going to be talking about, later today, we are still going to be talking about valid and invalid order block. All right. This one, I'm still trying to just tell you why order block is. All right. So sorry, my network chip up there a bit. So let me reshare my screen. Okay, hold on. All right. Can you guys now see my screen again now? Okay. All right. All right. So let's continue here. So we are still talking about we are still going to be talking about valid and invalid order block. But then let's say I did not really know what a valid and invalid order block is. What I'm just going to do is, even when you know what a valid and invalid order block is, now look at this move here. After we must have taken our profit here, we're going to then look at this move. Where is our what? Is there any other block right here? Just watch. I'm just going to take this line here to see if there's any other block right here. There is no other block right here. There is one right here, as you can see. There is one right here. There's another block right there. Let's see if there's another one. So there's a fair value gap here, which means there is what? Another block right there. So this is my what's my other block right here. And this here is an other block right here. Guys, please, this place is very important. I want to show us something here, guys. Please, I want you guys to listen here, please. Now look at this. Look at this level here. All right. The market moves up like this. It's giving us this pullback like this. Gets to this other block and continue going up. Now, if I'm supposed now, I'm a very realistic trader, guys. I am a very, very realistic trader. I don't cut corners, right? I don't cut corners. I'm going to tell you exactly as it is. Now, normally, if I'm to take this trade, guys, if I'm to take this trade, this is how I'm going to enter this trade. Just watch. If I'm to enter this trade with what I've taught so far, with what I've shown on so far, this is how I'm going to enter this trade. Let's say I'm just using order block to enter trade, right? I'm not using order confirmation. I'm just using order block. I will enter at the beginning of this trade. my take profit is going to be my take profit is going to be at the end beginning of the pullback, and then my stop loss is going to be just below here like this. Guys, look at this. This is how I would have entered this trade using the knowledge I'm showing us on other block, right? But look at what happened. The market actually now came down and it's my stop loss, guys. The market hits my stop loss before going back up in my direction, before it now went, it's my take profit here. So what should I have done? How could I have done this? Like, look at this. I entered there. I would have the market. This is where I entered. This is where I'm going to have entered. And the market still is my stop loss. So why? Why did the market do this? Why did the market do this? Why did it do this? Now, I might say sometimes it's forex trading. Sometimes the market do shit like this. No, but there's actually a reason the market did this. There's actually a reason the market did this. And why is that? That is where we start getting to what? Liquidity. That's when we start getting to liquidity. If we look here, there's actually what? A liquidity right here. This level. Let's go down to the 4-hour time frame. We're going to see it. Again, if you do not understand what liquidity is, don't stress. You are going to understand soon enough. All right, so let me reload this page, I guess so. You are going to still understand what liquidity is. Now, let's talk about that level. Let's talk about that. Let's talk about that. This level. Where is it? Okay, this is it here. Okay, this is it. Yeah, this is it here. So what happened here? Now let me show you. Let's go to the 4-hour time frame. Again, this is just me telling you what happened there. We have not started. Look at it. It would have hit your stop loss here. Like this. It would have hit your stop loss. And then the market would have continued going up. Now, what is liquidity? We are going to be talking about that later on. Anytime you are seeing something like equal highs and equal lows, now I don't want to talk about liquidity here yet, right? Because I want us to really understand this whole thing properly. But just note that something happened here that make that place, right? That makes that thing happened. And then we're going to be talking about it a lot, right? Liquidity is a very important topic that if you do not really understand it, you are going to still take some unnecessary loss. You're going to take some unnecessary loss that you should not be taking in the market. Right, but then that is why having multiple having multiple confirmation is very important, because look at here, I'm probably going to wait for what? A change of character. Look at this, it's going down like this. It has gotten to what? My order block. Normally this is where I'm supposed to take the trade, but I'm not going to take the trade here. Why? Because I'm waiting for what? I'm waiting for what? Change of character. Look at this, right? And then this would have been my change of character here. As you can see, this here is my change of character right here, my change of character. And then look at what happened. So normally once we see a change of character, we're expecting to see what? This is higher high, higher low, higher high. We're expecting to see a higher low, but then we did not see a very obvious higher low here. All right, and that is where order block comes into play again. Look at this. Let me show you something. This is on the lower time frame. I'm just going to mark out what? My order blocks, right? So let me get this one off so we can be able to. So where are the order blocks here? Look at this. We have what? A fair value gap here. So this is where I'll probably first expect the market to get to. And that's why I said not every trade is takeable. Like this one now, a normal person would have missed this trade, because look at this. This is where I would, me myself even, would expect the market to come back to. I would expect the market to come down to this level. I would really, really expect the market to come down to this level, because there's this like a valid order block that actually even gave us a change of character here. Right, but then there's still something else here. As you can see, there was actually what? There's no even order block here, Seth. There was no other blockade even. But as you can see, the market went up like this, came down to this level. There was no visible other block here. And then it continued going up like that from there. So we would have just look for what? Another entry opportunity after this move here. After this move here. That's when I'll just wait this out and wait for what? A very large pullback. Even if I miss this one, if the market did not come back here, if I have missed this move, I'll wait for what? A good push move, a pullback. We're still going to be talking about entry. When we talk about entry, look at this. I still think the markets will still come to that level. As you can see, the market is coming. But then let's see where the market is actually going to come to. I think there's a gap here that, of course, like I said before, the market will still come back to fill. And I think that's what's happening here. But then let's see what is really going to happen on this. Okay, let's see what's going to happen here. Let's go back to the 4-hour time frame. Let's see. Now look at this one here, guys. Now, another important rule for order block. Guys, another important rule for order block is if I see an order block on the 4-hour time frame and I'm not seeing it on the 24-hour time frame, it is not a valid order block. You have to see order blocks on. Look at this one now. If I'm seeing a order block here, this is an order block here that I think they'll see. Look at here. Before I get, I'm going too fast. Even I'm going too fast. Please, princess, stop that. There's something I want to explain before I explain that one, right? Before I explain that, let me explain this, right? Now, listen attentively. Sometimes, why market structure or price does not respect market structure sometimes is because, look at this. Let me show you an example. We have something like this. Please stop that. We have something like this, higher high. It can actually be a higher low like this, and then a break of structure. But then there is what? There is what? An order block right here. But there's another block right there. All right. But then there's an order block right there. But then look at what the market will now do. That is why you need to have understanding of all these things to be able to understand them properly. But there's another block right there. Look at what the market will then do. The market will then do something like this. Come down to this other block. And then continue going up. And then you'll be like, what is going on here? Because a lot of people, if you have just the knowledge in market structure, you feel like, oh, this is what? Change of character. You feel like this is change of character here, and then you're not wrong. You be like, this is change of character. This is change of character, right? So you're expecting what? To see what? So, and according to what I've been preaching, once you see a change of character, you're expecting what? A downtrend. So you're expecting to see what? Lower high, and then a continuation like this. But that will not happen, right? That did not happen. Instead, it gave us a change of character like this, and then it continued going up. But then why did that happen? Why did that happen? Because there is an order block right here. There is an order block right here that the market will get to and continue its movement. It has continued what? It's uptrend. And that's kind of the same thing that is happening here on volatility 25 index because a lot of people are going to think, let me show you. A lot of people are going to think, look at this. Look at this. We have what? This move, higher high, higher low. Then we have this one here. We have this one. This one is not even a break of structure. And this one is even clear, safe. Because this, now look at this. According to our market structure, we want a break. Where is the break of structure here? This here is the break of structure here. So this one is not even a break here. So if I'm to draw the path for this, it is like this, higher high, higher low, higher high, and then we're expecting to see what? So a lot of people will think it is here, the markets. A lot of people will think this as this. Let me show you. A lot of people will think this as this. Higher high, higher low, higher high, higher low, higher high. And they were expecting to see what? A higher low like this and a continuation like this. This is what I will be expecting. But that's not what's happening. Because this is what's actually happening here. Higher high, higher low, higher high. We're expecting what? A higher low and a continuation like this. as you can see. All right. So where is this one going to get to? We're expecting it to get to what? We have what? An order block right here. That's our point of interest. So we're expecting this market to get here. All right. We are saying now let's see if this now one thing is if you are doing let's go to the 4 hour time frame. If you are doing your analysis, let's say on the lower time frame, you have to make sure that it's corresponding. Look at this. This order block here, this order block for 24 hours time frame, right? But then if you check, there's still also an order block right there for what? For the 4 hour time frame. And this is exactly what I just explained right now. All right, this is exactly what I just explained right now. Let me show you. Let's go back to the 24-hour time frame right here. Remember, on the 24-hour time frame, we had something like this happen here. This is what the order block that we were hoping the market is going to get to, right? On the 24-hour time frame. What this is what we're hoping the market is going to get to. But for a reason, the market pulled through our order block. Let's say we want to use order confirmation aside order block, right? We go to the lower time frame. We are seeing this order block, all right? We're expecting the market to, we expect this order block. But look at what happened. The market give us what? Look at this on the 4 hour time frame. We are seeing this. Let's say lower low. Hold on. We are seeing this on the lower time frame. Let me start from here. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. That's got it to our order block. It has even exceeded our order block. So we are expecting to see what? A change of character, right? So we are seeing this, and we have this, our change of character. We had our change of character. So what are we going to expect after we had our change of character, guys? Let me show you. What are we expecting after we had a change of character? We're expecting the market to come back, what? To come back to what? Our order block right here. That will be our entry signal right here. This would have been our entry signal. So we would wait for the market to come back here for us to enter. But then look at what happened. The market is just going up. It did not come back there. It did not come back there. But later, look at what is now happening. The market is now coming back there. Like I said yesterday, once there is what? An order block, the market, what there is a fair value gap, the market will at some point come back to fill that thing later in the future. So this our order block here, this our entry here is still valid. The market has done a lot of movement and it's actually coming back to what? This our order block. And then if we are going back to the 24-hour time frame, it is also the same because like I said before, order block has to see if you are seeing another block on the lower time frame, just go to the next highest time frame. You have to see because sometimes you see another block on the lower time frame, but there is no other block on the higher time frame. I'm going to show us an example for that. I'm going to show us an example of that. Now look at this. There's also another block here on the what? On the 24 hours time frame. So they are the 24-hour time frame and the 4 hour time frame are saying the same thing, as you can see. They are both saying the same thing, as you can see. So market structure is corresponding or going together with other block. This is a very powerful place that I'm sure that the market is going to come like this and reverse from. Giving us what? A new what? Break of structure. Please, do we understand this? Do we understand this, please? Let me even allow us to be able to say to talk. Do we understand this, please? Do we understand this? I'm having a bit of a cold this morning. Do we understand this, please? Guys, are you following me? Are you guys following me even? Good, 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 good. So here, so here we are so sure that the market is going to get here and give us this push to the upside. Now we're still not going to just start buying when we get here. We can do that, but then we're still going to look for more confirmations. All right, we're going to look for more confirmation. So what are the criteria for a valid order block? Right? What makes another block valid? What makes another block valid? Do we only enter trade when there's a retest? Yes. Now look at this. We have had this move. We have had what? Let me show you. Let's say we have higher high, higher low, higher high. No, we have had this higher high. We have had this what? Break of structure. We've had our break of structure. So what are we to do once we have this higher high? What are we to do when we have something like this? Just look for what? Your order block right here and wait for it. Look for your order block right here. Right? So once you see your order block, you see what the market comes back into here. Look for what? It's either you enter immediately on this order block or you go to the lower time frame. Again, I'm still going to be talking about entry. So don't worry about that yet. Of course, there's a way you are going to enter with the even order block. There's a way for that too. We're still going to be talking about that. We have not gotten there yet. So it gets to our order block, we enter this trade. So once it gets to our order block like this, hold on. Once the market comes like this, I get to our order block like this. What are we to do? We enter enter the trade, and then this is how we do it. We enter right here, we enter right there. Our stop loss is going to be just below, give it a little space below the order block, and our take profit is going to be at the high like this. This is how our entry is going to be, and then we are then going to have something like this. Sometimes the markets will do a lot of stuff like this. Sometimes it will even range a bit before it gets to what? Before it gets to what? Before it gets to our take profit. So worst case scenario, the market data our stop loss. Now, if you do something like this, now guys, let's take this a bit further, right? Let's take this a bit further. Let me show you. Now look at it. Look at it. First, you need to understand the bias of the market. What trend is this market? Is it an uptrend or a downtrend? Again, we are still going to be looking at this. We are still going to be doing top-down analysis. Now, let me talk a bit about top-down analysis so we understand this, right? I want to be giving us a little bit of understanding before we get to the main topic. Let's say I want to start my analysis from the 24 hours time frame, right? Now, it depends. You can start from any time frame, obviously, right? It depends on your style of trading. Let's say I want to start with 24-hour time frame here. I start from here. Again, when we get to top-down analysis, we are going to be doing this properly. I start from 24-hour time frame. The next one I'm going to look at is 1 hour, right? I'm going to use 24-hour time frame to enter to see what the bias of the market is in an uptrend or a downtrend, right? To note other blocks, where are my other blocks and all that. Now, the next thing I'm going to go is the 4-hour time frame, the 1 hour time frame to see what, like, let me just do an example of that. Now I'm on the 24-hour time frame right now. Where's my other block here? I know the market's what? An uptrend. I know the market is currently giving us what? A downtrend coming to this other block. And again, what do I want to do? Hold on, sorry. I want to mark out what my point of interest according to market structure, the highest point, the lowest point. It is in here I'm interested in. All right. Once the market breaks here, that change is biased, right? That change is biased. It's as simple as that. Hold on. So when the market breaks here, it has changed its bias, right? I'm not longer trying to look forward. I'm just going to once the market breaks here, I'm on the 24-hour time frame. I'm looking for another other block down here, right? But this is the one I'm interested in right now, right? Why am I interested in this one, right? Because it is this one that has broken this major structure. This one, now, these are things you can use to locate or to find your point of interest, right? Your high value order block. The other block that gave us what? A change of character. I mean, a break of structure. This one gave us what? A break of structure here, as you can see. If there were to be another block right here, it would have been something we're looking looking at, because this one here also broke structure. But then there cannot be another, even if there's another block right there, because there's a very high fair value gap here. This one is what we are looking at right now, because what is the one that actually leads to a break of structure. Now, if this one gets broken, we are looking at an other block that broke what? This structure. We are going to look for what? Another other block that broke this structure. Guys, it's as simple as that. You're looking for other block that broke structure. Other block that broke structure. Right? Now let's look at this one. Which other block broke this structure? Right? There's actually another block right here. There's actually another block right here. But then the extreme other block. Is there an extreme other block here? Yes, there is an extreme other block here. As you can see, there's even another block here. Look at this. I'm going to see this other block here. There's a tiny bit of other block right here. As you can see, there's even, see, look at this other block here. It was this one the market respected. So you need to be able to locate all this other block, and then with your market structure, look at this. As you can see, the market moves like this. After we had our break of structure like this, just watch. After we had our break of structure, this is a break of structure here. Let me label this. Break of structure. We had our break of structure. Market came back like this. You see, there are other blocks right here. But then all this one are not, as in they are not high value. Again, once the market gets, look at this one. Once the market gets here, this one here would have confused a lot of people. But then we are looking for what? We are looking for what? Market structure shift, change of character. The market came like this, broke this one, gets to this one. I respected this one. We would have seen what? A market structure shift. Now look at, once we see, now let me show us this one. Let's see this one. Let's go to the 4 hours time frame. All right, look at this. Once we had that market structure, once you had the market tap into what? Our other block, we are waiting for what? Market structure shift. We are waiting for what? Change of character, right? So where is the change of character? Now let me show you. The market was giving us a downtrend here, lower low, lower high, lower low, like this. Now let's mark this out so we can see it properly. Let's mark this out so we can see it properly. Hold on. So here we have what? Lower low, lower high, lower low, lower high. Then we have this low like this, right? Then we have this high, higher low, higher high. This is what? This will be our change of character. Now, as you can see, the market gave us a change of character right there. It gave us a change of character right there. Or we can do this like this. Or we can do it like this. Just hold on. Just watch. Let me do it properly. This is also a lower high here. Lower low. A small lower high. But I prefer to use this on me personally. And then we have this high, low. We have this change of character here. Because if we are going to the lower time frame, again, we would have seen this is a change of character here, 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 and then we have this. And then this would have been our entry, because here was what? Another block here again. As you can see, let's talk about this level. Look at this level here. Look at this level. After this push here that gave us this change of character, this was what? This here is another block right here. Right? As you can see. So there is no other block right here. So the market gave us this. I came tap into our other block. This would have been a perfect entry here. This would have been our entry to write this to the upside. As from there, the market started going up. So my bottom line here is we are looking for what? We are looking for what? Another block that what? Broke structure. Another block that broke structure. Another block that broke structure. So let's talk about that. So other block that broke structure. That's what? Break structure. So let's go back to our break of structure here. These are break of structure. So if the market, if the market breaks through this other block, we're looking for another other block that breaks structure here. So, but then I think the market will respect this one. So again, and that is why we're not just going to be entering into the market, even when we get to what? Our other block. We're still going to be looking for what? A market structure shifts. Market structure shifts. Once we get our market structure shift, we're then going to. So as I was saying before, I divert into the whole thing. So we start what from the 24-hour time frame, and then I go to the 1 hour time frame. As you can see, on the 24-hour time frame, I'm looking at what? I'm looking at the bias. I'm looking at my other block. On the 1 hour time frame, I'm looking at what? Change of character. So if this one gets here, I'm waiting for change of character on the one. If this one gets into what? My other block, I'm waiting for what? Change of character on the what? I'm waiting for change of character on the what? 1 hour time frame. Change of character. Once I see change of character, and then I'm going to go down to the 5 minutes for entry. 5 minutes for entry. Look for another change of character on the 5 minutes for entry. It's as simple as that. So I'm using 24, 1 hour, 5 minutes. If I'm starting for the 4 hours, I'm using 4 hours, 15 minutes, 1 minute. It's as simple as that. Once we get to, once we get to entry, we are going to be talking more about that. Once we get to entry, we're going to be talking more about that. Right. So you're going to really understand. So we're taking this whole thing one step at a time. So today we are still talking about what? Other block. We're still talking about other block. So what makes an order block valid? What it has to break what? Structure. It has to lead to a break of structure. Right? It has to be the one that leads to a break of structure. Right? One. Number two, it has to be, it has to have what? A strong impulsive movement. Look at this one now. The reason, even if there is an order block here, the reason this one would not be valid is because it does not have this strong impulsive movement. It's slow. Look at this one. It has a strong impulsive movement here. This is a strong impulsive movement, right? This one does not really have that strong impulsive movement. So another block has to have what? A strong impulsive movement. Look at this one now. The reason this one was valid, look at this, a very strong one. If you see another block that has strong impulsive movement, just one strong candle, it is valid. Look at this one. This one, strong impulsive movement. Let's see another one. Let's see if I have other ones. Let's even check another market here. Let's check another market. Let me just stay on one market. Let's check another one. Let's take volatility 15 1x index. All right, let's see this one. Where is the other block here? Look at this strong impulsive movement. This here is our other block. So we're expecting the market to, get to this level. All right, because the other block gave us what? This strong impulsive movement, as you can see. And it actually lead to what? A change, a break of structure. These are break of structure here. It actually led to a break of structure, as you can see. So what I'll do here is mark out what? My point of interest to this highest point. So where I'm interested in, I'm on the what? I'm on the. Now, the reason I would not consider this one, there's another block here. Look at this. There's another block right here. Now, the reason I would not consider this one as my other block, as you can see, market actually respected this other block. You got to say, if you respect it, is their strong point. So if you do not really understand how to locate what valid other block is, you would even think this one is valid and you jump into it. But look at what happened, broke through it. Now, the reason this one is not valid is because look at this. It did not lead to any break of structure. This was the one that led to our break of structure here. This is our break of structure here. But this one is not as strong. It did not lead to the major break of structure. This one is the important one here, as you can see. And then one thing is, look at this. Look at this. Now, this will confuse a lot of people a lot. Look at this. A lot of people be like, look at this. I have my other block here. Now, look at this again. Hear this. I have my order block here, but the market keeps going up. Like, guys, because I'm showing you guys here of things that has happened in the past. If you are currently here, let's say all this thing has not happened. If you are currently here and you see this order block, you have marked your order block, the market has gone. You see another one, you've marked it, market has gone, it's not coming back there. You'll be like, you think this here. A lot of people will think this market coming back, it's going to come to my order block. But look at what? It did not come, it did not come there. Instead, it keeps going up. They'll be like, they are tired already. They want to look for opportunity to buy. But look at when, like I used to say, at some point, the market will still come back to fill those gaps. Because look at this. The market now started coming down like this to fill those gaps. So, despite the fact that I understand that the markets might not mitigate my gap like this instantly, I can still see this move here. I will still look for opportunities to buy. I'll still take out all these moves. I'll still take advantage of all these moves, which is something I'm going to be telling us once we get to entry. I will go to top-down analysis. We are still going to be getting to top-down analysis where I'm going to be showing you how you can take advantage of all these moves. But then while doing that, I'm still having this at the back of my mind, right? I'm still having this at the back of my mind. That, okay, the market might not have gotten to this order block yet, but then I'm so sure it's going to still come and fill this gap. Still going to come and fill this gap. That's one thing you should understand. All right, that's one thing you should. Now, like I said before, there are still going to be a lot of other gaps, fair value gap around this bottom. Now, the market might not come here in the long time, just like this. But I'm so sure that sometime in the future, sometime, the market still come down and fill all these gaps. Its market does not respect you, it does not do whatever you want. That's why you cannot just wait for the market to come here. This is a daily time frame. This is a long time. This is months worth, right? This is months worth candle. So you cannot just be waiting for the market to come down here. No. There are still ways to take advantage of all these moves. Take advantage of all these moves. And that's what we're going to be looking at the later future. We're still talking about other blocks and recognizing them. But that's just it. So let's see. Okay, let's see another market. Now look at this one. Let's see what's happening here. Look at this one is not really doing anything specific. It's not really. Look at this. Changing is biased. But then other block can help us map out what is really going to happen, what you are expecting. Look at this. There's an other block right here. So I still think the market is still going to come down to this level, right? So let's see if there's other block up there. Reason the market is still going up right here. As you can see, we have what's another block right here. So what do you think is going to happen? Look for what? Change of character for this to push this down like this. We're looking for what? A change of character to push this to the downside. I'm not just going to enter this market right here because, of course, is there other block up here? Definitely. Obviously, there's still another block up there. Let me show you. I even think the markets will break through this one. I think this one is the one that the market is going to get to. I think the market is going to break through this one here. I think, and I'm going to tell you why. I think the market is going to give us this, break through this one, and get to this one at least. So this one is not, right? I'm not considering this one. Why? Because of what we call liquidity. Yeah, there's another other block. Yeah, I'm coming to that. So I think the market will probably get to this last one here, or this third one. But this one that the market is currently in is going to break through here. Market could do this before coming back down to this level. Because there's this other block here that is dragging the market right down to this level. Now, why will the market break through this one? Because there's something called liquidity there, right? Something called liquidity. We are going to be getting there, and then you're going to understand all this thing properly. Let me show you. No, let's go to, yeah, look at this. Equal highs. This one too has equal highs. So the market will break. All this one are not high value. This is where the market is going to get to. We have equal highs, as you can see. Liquidity. The market will take all these points out. Again, we're still going to be talking a lot about that topic. And then here you can then refine what our order block, like this. So we think the market is going to get here to that level. So look at what is currently happening here on the 4-hour time frame. We have what from here, higher high, higher low. Did this break structure? Let's see if that actually broke. Let's see where break of structure. No, this is where break of structure happened. And what are we expecting? A higher low? I don't know. Higher high. Like this. So where is the higher low going to happen? Where is it going to happen? Or probably you can even still see this move like this, guys. You can see this move like this as one, even. You can see this move as one because I'm not considering this, right? Higher low here. Can see that move as one. Still the same thing. Where is our other block right here? Okay, we have one right here. The extreme. What other block? And then we have another one right. Okay, this one, there's no other block here. It looks like another block, but it's not. That's been mitigated. So this one too looks like another block, right? Look at this. No, it's not another block. So this is the other block here. So we expect this to give us a temporary downtrend, lower low, lower high. We're expecting a temporary downtrend to this level before we see what a push to the upside to this level. And then what are we overall expecting? This to then come back to this level. This is what we're expecting to see in volatility 10-1x index. Do we understand all this? Please. Do we understand this? So this is combining market structure and order block together. Now, there are some times that if you are just trading, yeah, go ahead with your question. There's sometimes if you're just trading market structure, there are sometimes that's going to look like the market is not, or price is not respecting your market structure because, yeah, you can unmute because of your what? Other block. Because of your
Um,
other block.
okay, sir. So I wanted to ask that in a case where okay, let's say we go down to the 15 minutes time frame or the 1 hour time frame, but then the this thing has been filled, like the other block, candles have entered them. But let's say in the 4 hours time frame, candles are not there. But in let's say the 1 hour time frame or the 15-minute time frame, candles are already entered and respected. So does that make it invalid?
No, now listen. If there is an order block in I'm going to show you. If there's another block in a higher time frame, there's obviously or definitely another block in a smaller time frame. But then listen, if you see, let's say there's a case you see an order block in a higher time frame, but you're not seeing it on the lower time frame, it is still valid. But then if you see an order block on the lower time frame, but then you're not seeing it on the higher time frame, it is not valid. I'm going to look for examples and show us. Let's even see this one, 4 hours. Let's go down to like the 15 minutes. Let's see if there's going to be another block right there. Now look at this on the 15 minute, right? We're on the 15 minute. Let's see this. This is the 15-minute time frame right here. So is there an order block right here? Let me show you. Hold on, let's see. Look at this. It's coming. This is our fair value gap right here, right? And this is what our order block on the 15 minutes. Of course, our fair value gap has been what? Entered into. But what is happening to our order block? Nothing. Now, like I said before, I think I've said this when I was talking about fair value gap. The reason people don't trade fair value gap is because fair value gap the market can enter into our fair value gap, go and come back to test our order block. As you can see, there is an obvious order block here in the 15-minute time frame. That most of the times, if there's another block on the higher time frame, you would definitely see them on the lower time frame. But then some of the times, if you see another block on the lower time frame, does not necessarily mean there is another block on the lower time frame. On the higher time frame, sorry. So if you are, let's say you are trading on the lower time frame, you are looking for entries on the lower time frame, and then you spot another block on the lower time frame. Try go to the higher time frame, maybe the next higher time frame to the lower time frame to see if there's another block there. If there is no other block in that higher time frame, then there is no, what's it called? It is not valid. It is not valid. It's as simple as that. That's a brilliant question anyway. So anyone with any more questions? Any more questions? Let's see other. So in this move here right now, what am I going to wait for? How will I enter this trade? Again, I'm on the 4 hours. Let's go to the 15 minutes right here. No, coming. Again, I like to mark out what? My point of interest. Now here, I'm going to do what? My path, my market structure. Lower low, lower high. Have we seen what? A lower low yet? No, that's not giving us the break of structure yet. So I'm waiting to see what? A break of structure. Right there. So what I'm probably going to do here is do this. Waiting for my break of structure to happen. Once my break of structure happen, I'm going to look for what? Once I see a break, let me use this. Hold on. Once I see a break of structure, I'm just going to wait for or look for what? My order block right here, which is this. So what I'm expecting here is to see what? A break of structure. Market comes back to my order block to continue down. JC, this is our top-down analysis here. This is our top-down analysis. So this is what I'm probably waiting for on volatility 10-1x. I'm waiting for a clear break of structure there, and I'm waiting for the market to come back to that other block. So sometimes, guys, the market will take a lot of time before it gets here. So you don't miss it. Sometimes you are not on your system or your laptop before the market gets here. And we're still going to be getting to that. So we don't miss this. We are going to be setting our sell limit. Is it called sell limit? I don't know. We're going to be just setting this. Once this has actually given us what? A break of structure, because we are sure of this market, we can just set, or what we can do to make this even, we can go down to the lower time frame. Again, I said once there's another block on the higher time frame, you can definitely spot it on the lower time frame. Let's see if we can spot that here on the lower time frame on the 15-minute right here. Let's see if we can spot order block here. Hold on. Now look at this. Now this is the question you asked the other time. We saw another block on the 1 hour, but look at it. We are not seeing it here on the 15 minutes. It's not clear here at all. But then let's see if we can find it. We can actually find it. Look at this. This is our fair value gap here, right? That's our fair value gap. That means we have what? Our order block here on the 15 minutes. Now let's see if we correspond with our order block on the 1 hour. As you can see, it actually did correspond, as you can see. So you have to make sure that it correspond with the higher time frame order block. As you can see, it corresponded with a higher time frame order block. If it did not correspond, it is not valid. So what I can do is, once you want to enter, you entry has to be with lower time frame, right? It has to be, if I'm setting my limits, I'm using this lower time frame entry because I want to be sure I'm just going to put my entry here. I'm sorry. My entry here, my stop loss. My stop loss is actually supposed to be so for safe for more secure one, stop loss is supposed to be above here. But then for this one, I'm probably going to put my stop loss here, right there. Because if the market is going to, guys, if the market is going to come down from here, it has no reason to come to this up here. If the market is going to, my stop loss is going to be here, just right here, above this high. If the market is going to turn back, it's going to give us this, follow this market structure, come down from here. There's no reason for it coming to all this level because there is no reason for it to come here. There was an order block here before that has been what? Filled, as you can see. There was another block right here, and the market has, entered and filled it. So there's no reason for the market to come back there again. So my entry is going to be there, and then my take profits is going to be the low here. First take profits here. Look at the risk to reward. Perfect. So my entry is good. No, this is my entry. Or sometimes I'm going to put it at just a bit like this. Entry, stop loss, take profits. Take profits 1, actually. Then, look at it here. Now, because we know the market is still going to come to this level, then you can even set our take profit right here. As you can see. But then first, we want to see a clear break of structure here. But I think it's going to happen. I think it's going to happen. So it's as simple as that. Anyone with any more question? I hope we're having much more clarity here. Now, as we are going into the whole thing, the next thing we're going to be talking about is liquidity. And then after liquidity, I'm going to talk about top-down analysis. So when we talk about top-down analysis, we are then going to bring everything together. We're going to bring market structure together with order block. Now, we're not going to be talking a lot about fair value gap because we know now what we are using fair value gap for now in this instance is to locate what if this order block is even an order block. Because before there is going to be an order block, there has to be a fair value gap. So we won't be really talking a lot about fair value gap because we know it's used, right? We're not trading fair value gap. So we're then going to be bringing market structure together with order block, liquidity together, and then we're going to put everything into what? Top-down analysis. We're going to put everything into top-down analysis. So when we understand top-down analysis, we're then going to talk about entry. When and how to enter. When and how to enter. And that's once we finish all that, and then you understand all this. Once we finish all that, and then you understand, and then you can say, with practice, of course, you're not going to get this at once. Trust me, you're not going to get it at once. Then you just need to practice, and then with practice and the understanding of all these things, again, all these videos are on my YouTube channel. You can always go back to watch, and then you understand this whole thing properly. You can then say you're a professional trader because that's all that is required. That is all that is required. You don't need indicators. You don't need all these things. You just need pure understanding like this. Once you understand this whole thing properly, now you don't even have to cram anything. Just watch the whole thing. As you can see, I don't even need to cram anything. I'll just open the chat, see what I want to say, and follow it. It's just as simple as that. It's just as simple as that. Now, again, doesn't mean that you can't take any loss with this. Of course, you can. Now, look at this. Why would we put stop loss if we are so sure 100% of this whole thing? Market Forex can, market can take out your order block. I think when you see stuff like that, you don't get discouraged. Now, look at my risk to reward. Look at this. Look at my risk to reward. Imagine taking, guys, imagine taking even if you take guys, even if you take 10 trades like this with this risk to reward, you take 10 trades like this, right? In a week, you're able to take 10 trades like this, and you lose five, you win five, you'll still be in massive profit. Guys, you take 10 trades like this, you lose five, you win five, you are still going to be in massive profit. It's as simple as that. It's as simple as that. First, you just need to understand market structure. You need to understand order block properly. But sometimes you see that the market does not respect price, does not respect market structure. Why? Because there's another block that's magnet, that's acting like a magnet, that's dragging it. But then if you understand the of that block, you'll be able to know what is going on. And then once you understand liquidity too, you understand liquidity, and then we then bring everything together. We then understand top-down analysis, and then we understand entry. That's final. That's final. All right, that is it on part 2 on fair value gap and order block. All right, that's part 2 further. So the next topic we're going to be talking about is liquidity. The next topic we're going to be talking about is liquidity. All right. All right. So so that is that. I'm going to be stopping the recording here.